Okay, before I get into 13-14, because this is the fiscal year we're in right now, 13-14, I'd like to give you some actual unaudited numbers that we have from 12-13, and these are actual numbers. At budget 12-13, which was released in March of 2012, we projected a deficit of $258.4 million. And that, of course, at budget time, we're doing a projection based on the 12 months that are yet to come. It's an estimate. It's a projection of revenues. It's an estimate of what expenses are going to be, and it's all projection. It's all estimate. And then we do the mid-year in November. So for 12-13, the mid-year was in November, and at that point we had 6 months of actual numbers, and 6 months yet to come. So there was a revision of the projection, and because of some volatile oil numbers, the projection went up to 725.8. Then at budget 13-14, when the Minister of Finance gave budget 13-14, and of course all attention now is on 13-14, but he also gave the revision numbers for 12-13, because at this point you're coming to the end of the year, so the budget was in March of this year. So we've now gone through, I think we have actual numbers probably in for 10 of the 12 months. Because there's always a lag of a month or two before the numbers come in from the CNLOPB or come in from government departments or come in from the Government of Canada. So the minister, when he gave budget 13, also gave a revised estimate for 12-13, and that was 431, a deficit of 431 million. We now come to a point where the Comptroller General prepares the public accounts, which is the actual numbers for 12 months, for the past 12 months. Instead of, whereas budget time is a forecast for the coming 12 months, the public accounts are the actual numbers for the past 12 months. And so you have real numbers, and they're audited by the Auditor General. Now, they usually come out either in December or in January. And we were hoping to get them out earlier this year. We'd like to get the last year's number out before we're discussing mid-year of this year's numbers. So we have the numbers, but they're not, the Auditor General hasn't completed the audit yet, and we expect that later this month or in January. So the actual numbers are now 198.8 million. So we've seen an improvement for 2012-13. And the actual numbers are what's important. Like 10 years from now, when people look back and say, how did the Newfoundland and Labrador do fiscally and economically in 2012-13, they're not going to look at the budget. They're not going to look at the mid-year. They're going to look at the public accounts. They're going to look at the actual numbers. And we spend a lot of time in this province talking about forecasted numbers and projections and estimates. But the actuals tell us how we actually did, and they're important. And those numbers seem to get, there's not a lot of attention paid to them, yet they're the true numbers. Now, if we move on now to 13-14 for this year, budget 13-14 outlined year one of a 10-year sustainability plan. It set out specific goals with respect to sound fiscal management over the long term, a plan that would include us eliminating the deficits and getting to a return to surplus in 3 years. And these are the goals that we wish to achieve, and I'm pleased to say today that we're continuing to work on getting back to a surplus in 2015-16. So on budget day for fiscal year 13-14, this is the budget this past March. It projected a deficit of just look at the second column from the left. We're projecting a deficit of 563.8 million. And we now have the mid-year numbers. And so we're pleased to see that there's been an improvement of about $113 million. We're now projecting a deficit for the year. It's still a projection for the whole year of 450.6 million. So because of that change, because we actually have a lower deficit in 12-13, and we're now having a lower projected deficit in 13-14, that's going to affect and improve our net debt numbers. as you can see, at budget time, there was a projection of net debt at the end of this year of 9.5 billion. And now, because there's a different starting point for net debt at the beginning of the year, coming from the 212 numbers, which we now have, and a smaller deficit for this year, net debt will now be 9.1 billion. So we get an improvement there of about $400 million. Okay. Now, why did this happen? If you look at the expenses, our net expenses for 13-14 are now expected to be about $270 million lower than projected at budget time, primarily as a result of what we anticipate could be some delays in getting all the program spending out and delays in infrastructure. This reduction will be offset by $62.5 million increase in the signing bonus in the collective agreements. So we have a net savings on the expense side of $207.6 million. You see that on the right-hand column under net expenses. So our expenses are down from budget by $207.6 million. On the revenue side, our overall revenue projections are going to be down $94.4 million. You can see that if you go up to the revenue. You can see the revenue is going to be down $97 million. The net income from government business enterprises, that's the Liquor Corporation and Nalcor, that's up by 2.6. So there's a drop in revenue of 94.4, but our expenses will also go down and offset that drop in revenue, and there's a net benefit of 113.2. I know there are people in the room who would like more information on the revenue. The downward revision in oil royalties is due to the fact that the Terra-Nova FPSO, we knew at budget time that was going down for maintenance, and the estimate was that they would be down for 24 days. That's what we were told by the oil company. But then they discovered some problems with some of the chains, of which they have 8 or 9, and they decided that they would do additional work. And that meant that they would be down, not for 24 days, they would be down for 75 days. And that's built in, and that's been the change. Corporate income tax is lower by $40.5 million. Mining tax is down by $30.3 million due to lower nickel prices. But offsetting the declines, we've seen Canada Social Transfer and Canada Health Transfer. These are federal transfer payments we get, and they're based on population. And the feds have re-estimated our population based on our growth of population. So that's now up about $38 million. And because of higher personal income for prior years, that's now reflected in personal income tax has gone up by $29 million.
So is that $38 million that's up?
The federal reestimate, 30, it's actually 39.7.
39.7.
Yep. And personal income tax is 29. But overall, revenue is down 94, and the main cause of that, of course, is the Terra-Nova shutdown has been 75 days, or is estimated 75 days. Instead of 24 days. There's been comments in the public recently about the price of oil being higher than expected, and as a result of the deficit would be lower. The average price of oil for 13-14 has estimated at $107 U.S. per barrel, which is higher than the budgeted price, which is $105 per barrel. And this has been offset by lower oil production. Again, it's about 2 million barrels caused by the Terra-Nova being down. As I said, Terra-Nova shutdown was estimated 24 days. The actual number is later revised to 75 days. So overall, we're looking at about 2 million less in production than was projected at budget time. Okay, the economy. The global economy continues to struggle, and it's mainly due to less than anticipated performance in the U.S. and in Europe and in China. So the U.S., which is our biggest customer, continues to deal with political and fiscal issues which serve to undermine growth there. And they're our biggest customer, obviously. In Europe, fiscal responses to the poor debt situation there, and austerity measures there negatively have affected economic growth. In China continues to grow, but the rate of growth is between 7% and 8%, whereas over the previous 10 years it was about 10%. So we're seeing less growth there, less growth in the world, less demand out of the U.S. and Europe, less demand for Chinese products, less demand that they have for our commodities. So expectations for 2013 economically are now a little lower than they were on budget day, but economic conditions remain strong, and most indicators do show significant growth over 2012. As you know, and as you can see from our own numbers, there has been significant growth in the province since 2003. The changes, are quite remarkable, really. And rather than just reeling off numbers, they do tell a story. Everything here has been driven by capital investment, which is, just look at that number, it's gone up 197% over 10 years. And that capital investment, the oil projects, Long Harbor, Muskrat Falls are driving employment. And we're seeing employment is up 22,000 people over 10 years. Unemployment rate is the lowest it's been in 40 years. Lowest it's been since 1973. Average weekly wages, we exceeded, I think last year we exceeded the Canadian average for the first time in our history. And in terms of capital investment, we're leading the country in the rate of capital investment this year. We think our capital investment is going to grow to about 10%. We're number one in the country. Last year here it was 30%. The year before I think it was 24%. So employment, we're fourth in the country. Average weekly wages, we're third behind Alberta and Saskatchewan. So we've got people working, they're getting paid more, there's great demand, it's great for labor. Personal income is up as a result, and because of the low tax, or the heavy personal income tax deductions that we have made, starting in 08 and continuing in 09 and in 2010, 2011, which reduced taxes by $500 million a year, we see disposable income has gone up as well. So people have money in their pockets, and we see the effect that that's had on retail sales. We've got high confidence, consumer confidence. I think we're leading the country there. Small business confidence, we're, I think, leading the country as well. Yeah, we're first in small business confidence. So we're, pardon?
Tax reductions.
The tax reductions, right. And we're retail sales, we're second in the country in rate of growth. Car sales are going crazy here. We're not leading the country, but we're well up there. Housing starts after a number of years of growth will not be as high this year. I think in terms of growth, we're last in the country. And that's mainly because of condominiums, multiples, they call those. We've had a lot of growth there, and now that's obviously slowing down. So the bottom line is the province economy is very strong, and most indicators showing significant growth. Now, the other side of our budget projections, and while our income has increased due to oil and gas and mineral exports, production is going to be lower than expected this year. And obviously, oil will continue to decline as it comes out of the ground, meaning less revenue for the province. So after years of surpluses, we experienced our first deficit in a long time in 12-13. And that was the great drop in revenue because when you went from 11-12 to 12-13, you'll recall that the Atlantic Accord money stopped. There was $530 million. that ended, and the whole offshore oil industry was shut down for a couple of months that year, and revenues declined by over $1 billion. That will come back, I'm pleased to say, in a few years. It won't get back to what it was, but the revenue will start to come back again. So as at budget time, we continue to project deficits for this year. It's improved a bit, and for next year, and then we expect to be back in surplus the following year, 2015-16. In order to reduce our net debt, we obviously have to generate a surplus once again, and if you generate a surplus, that means your net debt goes down. Our expenses have to be less than our revenues, and over time, we have to continue to bring our spending in line with the revenue that we take in. We have to remain diligent in managing the province's finances in the coming year, and also over the decade, as outlined in the 10-year sustainability plan. The government will remain focused on the province's long-term prosperity by encouraging job creation, strong communities, a vibrant economy, and natural resource development that will provide maximum benefit to Newfoundland and Labrador families. We've come a long way to get our fiscal house in order, and we have to ensure that we don't jeopardize that progress. Our approach to balancing investments in programs and infrastructure with debt reduction have been validated by credit rating agencies, and that's the approach that has to continue. So going forward, future expenditures must ultimately be brought in line with our revenues, and our ultimate goal is to manage within a framework that creates fiscal stability over the long term. We'll continue to strengthen the business environment to encourage the development of innovative industries and diversification of the economy, which is key. And a key part of that diversification, of course, is the Muskrat Falls project, which is an investment in our province's future. It's an investment that will provide the people of the province with safe and reliable energy at the least cost option compared to other alternatives that are available. But ultimately, the profits and the cash flow from that project, which would normally go to people in the private sector, will now come back to the taxpayers of the province, and will be used to either lower rates or to bring about progressive programs and new infrastructure. But it'll come back to us as opposed to going out to shareholders in the private sector. It'll come back to the people of the province as shareholders in the province. It's easy to forget how far we've come in 10 years. If you look at those numbers from how far we've come from 2003, it has been quite remarkable. And the gains we made, we have to protect. A long-term healthy fiscal environment must be the top priority of the government, and that will lead once again to a time where we can distribute the new wealth we'll generate to the citizens of our province who need help, as we have done in the past. In closing, let me just say there's a lot of work that goes into this, in getting ready for this. So I want to acknowledge the staff and thank the staff of the Department of Finance for their hard work in preparing the fall update. It's large, complex, labor-intensive activity requiring many inputs across all of government and the entities of government. All government departments and entities analyze the actual results for the first 6 years as a basis for determining their projections of revenues and expenses. The information comes to the Department of Finance by the end of October. The department also brings together a wide range of information and statistics of major projects that are underway in the province, and many data and indicators on other activities that are taking place in the economy. The department then develops economic and fiscal projections based on many sources of information. We have to get information from the federal government because they collect and administer our personal income tax, our corporate taxes, and our HST. So we have to get information from them, and I think we got information, for example, November 25th, we got an update, and that's why we ended up into December. We also have to go to the CNLOPB to get the actual numbers from the oil companies, because it's not just enough to look at what Brent has been and what the averages of Brent have been. You also have to look at the oil companies and when they made their sales and when they made spot market sales and they made long-term contract sales. So relying on the averages doesn't completely work.